I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. Record soybean crushings in Argentina, Brazil, and the U.S. are driving global soybean meal prices to multi-year lows. The boom has been fueled by growing demand for soybean oil in biofuel production, which has been generating a surplus of soybean meal. In July, the three countries crushed a combined 14 million metric tons of soybeans, down 3.4% from a year ago. Volumes were lower in Argentina during the month, though Brazil and the U.S. saw month-over-month gains. Total crushings so far this year are running 1% above 2024 levels. Soybean meal prices experienced considerable pressure during the first half of the year. Prices did recover slightly in August and September after a short-lived July inventory gap despite the record crush. Looking ahead, though, low Chinese demand for U.S. soybeans could continue to weigh on meal prices, providing livestock producers with potential buying opportunities, assuming that China does remain absent from U.S. purchases. Box beef prices have tumbled in recent weeks after hitting records earlier last month. The choice cutout hit a record $416 per hundredweight the first week in September, excluding those 2020 historical highs. Since then, prices have fallen to $363 in the first week of October, representing a decline of more than $50. Still, relatively strong demand has kept prices at seasonal records, with the cutout trading about 18% higher than a year ago. Box beef values tend to decline following Labor Day before a seasonal increase ahead of the holidays. Declining wholesale prices have been pressuring beef packer margins. Hedgers estimates that packers are experiencing losses of about $200 per head as cattle prices have remained elevated. Beef packers have been trying to regain control of supplies and prices to lift those margins. However, tight cattle supplies continue to provide upward pressure on the fed cattle market. Brazil's soybean exports are heading into a seasonal lull, but shipments continue to outpace seasonal averages. The country's trade ministry reported that soybean exports totaled 7.3 million metric tons in September. Volumes were down 22% from the previous month, but were up 20% than the same period last year. China remained a top destination for Brazilian soybeans last month, with volumes up 57% year over year. Additionally, China did represent 92% of total shipments. As of late September, China had zero volumes of U.S. soybeans purchased. However, there is speculation that China could purchase some U.S. beans under the radar with the lack of USDA reporting due to that government shutdown. Brazil's September corn exports, however, totaled 7.6 million metric tons, up 17.8% from a year earlier. However, year-to-date shipments are running 4.3% behind last year due to higher domestic demand. Now, Egypt was the primary destination for those exports, followed by Iran. China has also been booking some corn after being absent from the international corn trade. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.